Alright, today's video I want to go through something a little bit different because over the past few days I've been closely observing the market, testing out new potential strategies that I'm thinking of implementing it into my trading strategy. So in this particular video I'm going to dive into some of the key setups that I did not take, but they played out well in accordance to the strategy that I'm looking at. So I'll break down these trades, and also I will look at why they worked, and also discuss what I can learn from these missed opportunities. And if anyone else will be watching this video, whether you are refining your trading skills or you're just looking for a new insight, this video has something for everyone. So yeah, let's get to it. So open up here is euro dollar on the 15 minutes time frame. It's on the 15-minute time frame because everything essentially will be done in this time frame. I'm not going to be playing through higher time frame and lower time frame or intermediate time frame. Everything is done in this time frame. So that means looking at the direction, the possible trade direction, everything is done in this time frame. So let's start, as you can see, on Monday. And by the way, I have highlighted those trades, as you can see over here. And the reason why I'm doing this is because it's going to be easier for me to remember, and I don't waste a lot of time trying to go through the entire week again and figure out where these opportunities were. So yes, it is cherry picked, but the point of me doing this is to study what works, try to understand why those moves worked, and try to see what are the characteristics that I can take out of those trades that worked, and see how I can use them into my own trading strategy so I can improve, because I think that's the overall goal, is to improve every single day. Now, like I said earlier, I did not take any of these trades. I'm not saying that I took these trades because I did not, so I'd want to repeat that again and again. So yeah, let's start. As you can see, there was nothing here on Monday, and essentially, if you have watched ICT videos for 2022 model, I think it's pretty much the same thing. So what I'm looking for is price to essentially take out higher highs, and then I want to see this change in the state of the change in the state of delivery, market structure shift, whatever you want to call it, with some kind of an imbalance here. But this leg that is changing the state of delivery has to be impulsive, and also we have to have some form of a that will leave some form of imbalance here, fair value gap, for me to take this trade. So when you're looking for a bullish, will essentially be the same. You're just looking for a market to take out lows, equal lows, whatever, and then you want to see this change in the state of delivery or market structure shift with an imbalance here, so you can take it off of this order block, off of that fair value gap, whatever it is. This is the essence of what I'm looking for, or what I'm looking at. So you can start on Tuesday here. As you can see that we had this London session during Tuesday, didn't do anything pretty much. It was just arranging according to my definition. It didn't take out, and it took out this high, but this high for me, it's not like, if I am thinking of a range here, for me at least this is the range. So it had to come out and take out this high, or it had to take out this low before it reverses, and before I consider any change in state of delivery as a valid setup for me to take. So as you can see, during London session we didn't have anything, but then you come to this candle here that occurred at 8:30 a.m. and this is New York time. You can see that we didn't take, but we came extremely close, and I believe there might be some SMT here with GU. GU actually went and took out this flow. So there was some kind of SMT over here. And after that, during now the New York Open, you can see this huge candle, impulsive candle. Now this is a displacement that I was talking about earlier that I need to see. It's a move like this, it's a candle like this that shows a market social shift over here that also left an imbalance here, and this trade could have been taken off of this order block over there. Now the target for me, it's usually just 1 to 3 minimum. So most of my trades minimum will be 1 to 3. Most of my trades they just 1 to 3. I don't go above it, and sometimes I do go slightly above it depending on the reasons. Maybe if I see clear indication that, for example, here maybe these equal highs, that price has to come here, then maybe I may pull further than 1 to 3, but most of the time I usually just hang to 1 to 3. So yeah, as you can see here, the price came down to this order block and then it continued to move up to give me that 1 to 3. So that was on Tuesday. Now on Wednesday it's a different case. Wednesday during London session there was a trade, and as you can see, we didn't take any highs, we didn't take any lows. Now this is the other thing that I'm seeing, that the market does not necessarily have to reverse. It doesn't always have to reverse. Sometimes it will give you a continuation. Sometimes a market will be going in a certain direction. You know, it will just give you a chance to enter in this leg for a continuation. So what are the criteria for a continuation? My rules for continuation is an impulsive move that has an imbalance prior to my kill zone trading sessions. Now for London, my kill zone trading sessions are from 3 a.m. to 5 a.m. and for New York Open is from 9 a.m. to 12 p.m. So if I have an impulsive move that has multiple imbalances prior to 3 a.m., most likely I'll be looking to trade off of those imbalances that are left behind. So from here, the only way I will be looking for a reversal is if this high was taken, right? But if this high is not taken, but we're taking this, we're filling up this imbalances area over here, and then we're getting this candle again, an impulsive candle that actually takes out the low and leaves a fair value gap, I will take a trade for a continuation. So again, it was based on this bearish order block over here with a 1 to 3. There was no particular area that I was looking for. I know there was this level down here, but at this particular time, if I was trading, I would not be thinking that price may come all the way to take out this low, because we have this order block over here. So yeah, I would be hesitant to put my take profit all the way down here, because I don't know how price will react on this order block. So that's why for me, I think it would make sense if I'm trading for price to simply hit 1 to 3 and I'm done, I'm gone. So this again was on Wednesday. We came here again on Thursday. Now Thursday, it was the same thing as Wednesday, continuation, but now we're looking at the New York kill zone. Now the same thing I said, impulsive move prior to a trading session. Most of the time I'll be looking for a continuation. Again, the same thing here. As you can see, we had this huge impulsive move to the downside. Yes, we had this section over here that we had this move here that indeed had areas of imbalance. That price did come up, and the price did come up to rebalance. For example, we had this fair value gap over there, right? So this was a fair value gap there. We had another fair value gap up here. So these were areas of imbalances that I was looking for price to come and trade in for a continuation, not a reversal actually. But as you can see, price did not give me any chance. And yes, I understand that I can take a trade over here. You know, I understand that you can take this trade over there. But as you can see here, for me, I need a little bit of more evidence that price is intending to move on that direction. So I will not take immediately here, because there's a possibility if this is a reversal, a price will just automatically come all the way up here and take out this high for a reversal, right? So that's why I don't want to take my trades off of the imbalances here, thinking that price will continue, even though that's the idea. But I would rather wait for price to hit whatever imbalance area that price, I'll wait for price to come in and take out or fill that imbalance and show me a sign that the price is reversing or continuing in the general trend. So that's why I did not take this trade, but I took this trade. This trade for me has it has more proof and more evidence in terms of where price is more likely to go. So that's why, again, here this trade did pass me by, even though we had consecutive candles moving downward, leaving areas of imbalance. Yes, you're looking for continuation, but I need more proof. So for me, I would have wanted price to hit those levels of imbalance, show me sign of continuing on a general trend, reversing, taking out maybe this order block here or this order block there, and then continue to the downside. So this for me would have been a trade, but price did not do that. Instead, it just went all the way down. So London session was a no trade for me. But coming to the New York session, as you can see, we've had this huge move during London session that has left an area of imbalance, fair value gap. As you can see, that outside of that session, price did trade slightly into it, even though it did not even reach the 50% of this area. It did not. But prior to the 9 a.m., which is in the New York session, where I'm starting to trade the New York session, you can see price it dipped down with this one singular candle that filled the same criteria that I have. One candle that is impulsive, that leaves a fair value gap. This candle did the same thing, right? So that's why this trade would have also been taken off of this order block further to the downside. And as you can see, I took it for 1 to 3 hours again, because that's as much as I am confident to take. And most of the time, as you can see, when price reaches 1 to 3, it reverses. I don't know why. I'm not going to say this happens all the time. Sometimes price moves further than that, but as you can see, once prices reaches 1 to 3, the move is not that it doesn't have further move to that direction. It usually reverses. This is not tested. This is not something that I've actually researched. No. But it's just something that I'm observing, and that's the reason why I am more comfortable with 1 to 3 than 1 to 4, 1 to 5, 1 to 6. It's very rare I hit 1 to 4 or 1 to 5. Usually 1 to 3, I'm out. So this was on Thursday. Now Friday was very interesting. Friday we got that reversal pattern. During London session, we had this high, we had this low, right? So I was indeed looking for London to hit and take out this low and then show me signs of reversal, changing the state of delivery for me to take sells. Now, as you can see, initially during London session, the market was just moving and moving slowly. It took out, but it didn't give me any move. It took out again this high, and then immediately we saw this engulfing candle that engulfed this bullish candle over there, and then after that we had this bearish candle again, leaving this area of imbalance over here. So this was a right setup to take. Now I did put a trade. I did not trade, this trade was not triggered during London session. It was triggered outside of London session. This was at 7:30, of which if you're trading Forex pairs, 7 a.m. to I think 10 a.m. this is what is called a New York a.m. a New York I think it's a New York open for Forex pairs. So it's still, you're still on the right, like it's still the right time for you to trade the Forex pairs. So this trade was triggered at 7:30 for, again, this, now you can see it was 3.62, and it was 3.62 because we had previous day lows over here. So now this is now the time where I'm confident to take more than just 1 to 3. I can extend to 3.6, 3.7, sometimes even 4, sometimes even 5 if I know, if I have a confident area that price will gravitate to. So this is a previous day low, and I was confident that the price will it's more likely that the price will come and take out these previous day lows. So that's why I took this trade would have been taken for 3.62%. So that was trade 1. Now trade 2 would have been this one. Now this trade would have been taken during New York session, and the reason behind that is I will be looking for a continuation during New York session. Most of the time, I've noticed, especially with dollar, very rarely the market does. I know here we have kind of like here, we have here, we also had here. We had a lot of New York reversals, but euro dollar usually continues a lot more. Like, it has more chance of continuing during New York session than reversing on New York session. This is what I have just observed, and yeah. So even if now the price would have, so I would have accepted the risk that price will just continue going up and take out these highs. I would have accepted that risk because I know most of the time New York session tend to continue than reverse. So that's why here again you saw this impulsive candle, this bearish impulsive candle to the downside that has left this area of imbalance over here. So the trade would have been taken off of 50% of this area of imbalance for price to continue further down. Now initially this trade would have been aimed for 1 to 3, but as you can see the market did close at 445 before hitting 1 to 3, so that was 2.5. So yeah, those are the opportunities that I saw. So the opportunities will be offered both ways, reversals and continuation. Sorry, let me just scroll over here. Opportunities will be offered both in reversals or continuations. Let me try to draw here. For a reversal, you're waiting for a high or a low to be taken out before a change in the state of delivery or a market structure shift. And for bullish opportunities, it's pretty much the same. You're waiting for lows to be taken before this change in the state of delivery, market structure shift, which is the ICT 2022 model. And then for a continuation, you're just waiting for an impulsive move prior to your trading session that leaves imbalance over here. So you're waiting for price to retrace into those areas of imbalance, and then immediately gives you a change in the state of delivery with a candle that has fair value gap. When you're seeing that, that is a trade that I usually like to take for continuation. A move, an impulsive move to the downside, areas of imbalance. We had price rebalancing, and then we reversed immediately with a huge decisive candle that has a fair value gap. So these are the things that I look for a continuation. But for a reversal, it's pretty simple. Taking out highs or lows like here on Friday, and then seeing signs of a reversal, you take a trade for a reversal after price has rebalanced. Or you can take a trade off of a fair value gap, or you can take a trade off of the order block. I just prefer the order block because it does give me a better risk to rewards. So yeah, these are the opportunities that I'm seeing, and this is something that I intend to continue to observe in the market and study further in the market, because this is just 1 week and I have a lot of experience where a certain strategy works best in that week, but then as the weeks are going, you might find that the condition changes and then that strategy doesn't particularly work very well. So I think it's just about collecting those things that are working and studying them over a long period of time to see what are the probabilities of those things repeating themselves over and over again. So yeah, I will continue to give an update on my findings, and I'm only doing this on Eurodollar. I don't trade anything else. I do touch here and there on NASDAQ, but NASDAQ, the strategy that I'm trading is different. So I may create a video on that later, but for today, yeah, I think that's it. So until next time, take care.